Welcome back to the Coinversation with OCT, where we sit down with the minds building tomorrow's crypto economy. Today, we're joined by Martijn Pullen, head of digital investments at Welf, a firm redefining how traditional wealth and tokenized assets can coexist. So, from real world asset tokenization to institutional adoption, Martijn's work sits right at the intersection of finance and frontier innovation. So let's dive in. Hi, Martijn. How have you been doing today?
Hi. Yeah, thanks for the invite. I've been doing great actually. So happy to be here.
Yeah, the pleasure is all ours having you here with us today, Martijn. So let's kick it off with the question, the basic one. Like I've read that you have been in crypto since a while now. I guess 2016, right?
Yes.
So what first drew you in, and how did that early curiosity actually evolve into your focus on tokenization and then investor relations?
Like in 2016, 2017, it was the first time that crypto came across me. So first I use it as a payment method for an online purchase. And then I didn't really see what it really was, right? And then after 1 year, I found out like, hey, this can be quite interesting. It was the first bull run that I ever saw. It was 2017. And I started to buy some tokens. I was still very young and I bought some. And actually, after a few months, it went down like 90%. So the $200 that I invested was worth around $15. And then I felt like this can actually be interesting. So I started diving in deeper, and from there on I really saw the links and the gaps, like, oh, this is really something interesting. So I started reading into it, starting investing into it, and then actually years later I met the right people and finally made this step into the digital world, right? So yeah, from investor to now working in the field.
That's amazing. And, like you mentioned, the crypto story, everyone who ever, invests for the very first time, they're always 90% down. And, I personally love stories that actually start with some kind of curiosity and then turn into something bigger, something, like you've been building with wealth. And it actually shows how, long-term believers can become the ones who actually shape the next phase of this growing industry. So, moving ahead, Martijn, as the head of digital investments at Welf. So, how are you actually merging the traditional wealth management aspect with the Web3 innovation side? And what does Welf's model look like in practice? And if you had to, just address people who don't know a lot about crypto or a lot about wealth in general, how would you tell that what it is about?
Like, to tell it in short is not really easy, because what we do is a lot. You know us for some time. We do actually a lot of things. We help people into the digital world, so to say. So if I would tell it in a few words, it would be mostly that we help people who have no idea what crypto is, do traditional financial investments. Mostly are high net worth individuals that see potential in this new world, but don't know how to take the first steps, right? So they think like, this can be interesting, but I don't want to get involved into scams or all these wallets, these platforms. I just need somebody who helps me with cryptocurrencies, or with digital investments in RWAs, but without the hassle, so to say. So what we do is we help them from start to end. So we look with them like, hey, what do you want actually? What's your risk profile, right? So we help them with traditional finance, so we can help them with stocks, with real estate, with cryptocurrencies. And then we really look like, hey, this new digital world, how can it bring extra returns for you? Because I think we all believe that the future will be digital. At least we do. So we see cryptocurrencies as a real asset class. But it's important to mention also that it has risks and that you should take it as part of your portfolio, right? So the people that we talk to mostly have a lot of money, and they want to do good things with it, right? So, for example, somebody who sold this company, we help them with, first of all, making more money. So we help them invest in the right options, in the right investments to choose with them together, and from there on, after we put them into the traditional financial world or into crypto investments, we also look how to structure the wealth, right? So making money is one, but keeping money is maybe even more important, right? So how do you structure your wealth? Where is your taxes? Where are they right now? Do you pay too much? Are you in the UK or in Europe and you pay 40% tax? That's like way too much if you earn a lot of money, right? So we help them structure, for example, in the UAE or in Switzerland, Luxembourg, and then also we help them how to enjoy their life, like how to spend the wealth. So we help with a partner lifestyle, and after all these things also comes apart like fulfillment, like what are you gonna do after you made a lot of money, right? So what are the choices then? What are you gonna leave to your kids? Do you want to start a charity? All these type of things, we help them all in one. And yeah, we made there a link for people, and then in all the things, uh, digital assets are an aspect.
I mean, that's fantastic. Actually helping the HNIs with structuring everything from like you said, making money is easier, but keeping it, sustaining it, and using it, investing it is kind of tough, and most people are not really good at it. So, I think it. Yeah. So,
Yeah, most
I
the
just.
people who made a lot of money, they lose it again because, especially in cryptocurrencies, I've made this mistake myself years ago that I kept all my wealth in cryptocurrencies, right? And you see that it goes up and down, and you can lose a lot, right? So it's most important also to bring this knowledge to especially young people, but also more risk appetite. Um, Type of investors, that it's very important to also keep growing your portfolio in a way that's sustainable, right? So that's very important, and also choosing the right jurisdiction. For example, we do a lot in the UAE. I'm currently in the UAE. We love Dubai. It's very good for corporate or yeah, like even tax benefits, right? So there are a lot of options, but you have to do them right. There is not never an easy option, never an easy out, right? So for sure, there are a lot of things to consider when you move your wealth to another country.
True. I mean, that was really amazing hearing it from you, and I think it's more of modernizing the trust part than just tokenizing wealth, and that's really important when we talk about digital assets or crypto in general. And moving forward, uh, the Welf token launch, as far as I know, was oversubscribed. And what do you think resonated most with the investors? And how does the token actually power Welf's ecosystem?
Yeah, the token was pretty hyped, correct? Like we launched 19 December last year, which was a very good time for crypto back then, right? President Trump just came into the office. Everyone thought the biggest bull run ever would come. We were perfectly lined up. We had a lot of attention. We had a very good use case, which people really could see. We launched together with Ape Terminal and Polka Starter, which was, I think, around 30 times oversubscribed. So it was a huge run on the token back then. We had an amazing launch. But of course, afterwards, the market didn't went how we wanted, all of us. But I think we still do great. We are two times above. We are still way above launch price. So that's very good for a token which is young, and for us it's all about building a long term vision, right? Because we said already from the start that we're gonna build out a regularity framework, right, for wealth. Like wealth started, of course, as an ID, right? But within 12 months, we're going from ID to institution. Because right now we're filing for the DIFC Category 3 license. For the ones who don't know what it is, it's like a full asset management license in Dubai. Also, we're busy in Europe with a full management license, which means that we can fully manage our clients' funds. So that means we cannot only make financial products, we can really manage the products ourselves. We are fully audited. They said literally like it's like a banking license actually, right? So that's a very hard one to get. You can see a few that have it, like Ripple, for example, and a few others, but only very big names. So it's really amazing to see that we could have built this within 12 months, actually, because we are, yeah, almost finished with the process. It was a very costly, but also very heavy process, but it's worth it at the end. Because, in my opinion, it will be like this that the few really good projects will stay and a lot of the trash will get out, right? Because the market is maturing. You see it. There are a lot of projects. They're launching every day, so many projects, and people cannot keep up with it. Like keep cannot invest in all of them, right? So the market is still very small on one side, but also the money has to be divided between a lot of products, right? So we want to stand out and go for the fully regulated way so we can really scale and we can bring real revenue in. So we're already making revenue, and more revenue is coming in, of course, with the financial products when the license is fully there. And we see Welf as the cornerstone in this whole ecosystem. We actually wanted to be part of the whole story, right? Like we really believe in cryptocurrencies. That's also why we're here, right? That's our edge within our whole company. There are so many wealth managers, but nobody is doing it in this way that we do it. That we fully like integrate cryptocurrencies in our whole strategy. And that's why we also think it's important to have our own token to showcase that it's really possible to work with the digital assets. And we also are happy to allocate parts of our revenue to the token, right? So we now launched the Wealth Engine, which today on like that we recorded is the first day that we activated the engine. So the engine is actually the kind of the like that's the word says it all. Like the engine is of course the powerhouse between token and the real business revenue will go into will partially go into the engine, and the engine will buy tokens from the open market and sends it to a segregated treasury which is made for it. So they will allocate a part to the engine, and the engine will buy it back from the open market, which of course brings utility to the token. And for the rest, later on in the platform, the token will be used, for example, to pay fees and then redemptions and all these type of things. Um, so it's really a cornerstone in the whole.
True, like you mentioned, we just launched back in December 2024 when the markets were good, and it's not even a year, and we've done so much. The Wealth engine kicking in place, and like you said, the licenses that Wealth has been acquiring. That's actually very nice because it gives it some kind of credibility that you also mentioned most crypto projects don't have. And if we talk about so many of the projects out there, the trash ones, because every day I guess new projects come in and they just vanish, but only a few set amount of projects are there which will make it you know so I think this moves to good greater direction. And like you mentioned, RWAs were popping off back in December. Personally, RWAs were like everywhere on my timeline as well. And I just saw that you recently spoke on a panel titled RWA liquidity, myth or reality or something. And are we actually, truly seeing liquidity breakthroughs, or are the tokenized assets still more of a promise than in practice? What is your actual take on this?
Yeah, that was actually a great discussion. And also, I'm pretty conservative in this one. Like, we can all say that, like, yeah, liquidity is coming and we have the best products, RWA, everyone's going to invest in RWAs. But the reality there is that not everyone is going to invest in RWAs. Because why? Because first of all, not everyone in the world is investing, right? Currently, also not. So why suddenly everyone would start investing? It's not making any sense. What it brings is RWAs bring a framework for investing, right? So it's easier to invest. It's less costly, so it's more efficient. So the framework is there, but the liquidity has to come from regular sources, right? From the already existing investors, from companies, from people who made a lot of money. That's where from outside cryptocurrencies does the real liquidity come. You will now see it in a few big funds like Biddle Fund from BlackRock. You will see the inflow from traditional business already because they see that Biddle is easier to invest than a traditional fund. So they start allocating there, but it's not the general retail investor that's going to invest there. It's also not the average Joe. It's the big companies who are going to invest there. I really believe that it opens a lot of doors for people. So I would encourage everyone to start investing, of course, from all classes. But the problem is that cryptocurrency retail people are not interested in, for example, 7-8% API per year. Because if somebody has saved $1,000 and he's investing it in either a gold fund or in digital real estate, he's gonna earn maybe maximum $100 a year, which he doesn't want. He doesn't want to lock up his 1,000 for this 100, right? He wants to put his 1,000 into a crazy yield pool, which is earning maybe 200% a year, or he is putting it in meme coins and taking the risk to make 5 times his money, right? So it's the kind of the all in or nothing mentality in cryptocurrencies. But for the bigger investor who has 100K or more, it's of course a great number. Like if you can invest 100K and earn like $10,000 like a year without doing anything and just on chain a few transactions, that's amazing. That's a lot of money what you then can make, right? So it's wonderful returns. But so you just have to see it in perspective. The bigger investors, yes, they will bring more and more to the digital investments, and RWAs are gonna grow massively due to it because it's easier. It has higher returns because it has less costs, right? You can divide it easier. You can spread your investments over multiple either aggregators or multiple DeFi pools, multiple lenders, and get very nice returns. So the risk is lower, but the retail will come less, I guess. It will grow like slowly, but in general, maybe some assets like digital gold will pick up. Like the gold rush was, of course, a few weeks before. There was a huge appetite for gold. Still, you saw that the digital side not so much, right? But you saw a lot of big funds who are doing more and more volumes. So I really think this trend will go on for the next years, especially in the bear market. You will see very big funds deploying on DeFi to get steady yields. We're also looking forward to do that on our own. So there are a lot of options, but I think that the retail mana is not there, right? And that's what brings you hype. You will not hear these big funds like bragging like, "Hey, I invested in digital." But the retail guy that invested will scream it everywhere, right? So he'll get a lot of attention.
I get, and like we talked about the institutional appetite for all this crypto custody and RWAs, like you mentioned, Black Rocks and the Biddle funds. Uh, Everything happened so quickly. I feel 2024, the starting, we went with the ETFs and all. And what do you think? What do you personally think that changed recently? That all these big bad boys wants a part of crypto, a part of everything, especially Bitcoin RWAs.
They see real yields. They see that it's really there, like it's really possible. Like a few years ago, you saw that already some funds were making very good returns. Also ourselves, we have some strategies which are running also online and in other structures, right? And digitally. And we make good returns. So they want to see track record, of course, right? But we have some big players who now come to us and say, like, hey, we saw that you made good returns. We want to go we want to on the table and we want to see if we can allocate something. Whilst 2, 3 years ago, they all thought it was a scam and would never work, whilst slowly they're going into it because they also see that these hidden costs of normal investments are bigger than now, right? Like on chain, everything is verifiable. You can see everything. all the transactions. You can see what the historical returns were. So you can showcase a backlog of results, right? So it's very easy for them to track it. And you see that more and more guys are now allocated. Some are even regulated. That's a very big step. So we think this will go more and more, and it's always the fight for the biggest returns, right? So if one big company is going into cryptocurrencies or DeFi lending, and he can promise 7%, while his competitor is offering 5%, everyone will go to this guy who offers 7%. So the guy who's offering 5% will have to also go there to do the same, right? So you'll see this rush for DeFi yields, I guess, soon.
True, true. I mean, that's some perspective, and I like to ask, like, after years across TradFi, DeFi, what's one lesson that you'd like to share with the upcoming new builders, and on top of that, one question that I would like to ask you, a fun question: if you could actually tokenize any part of your life and of your personal life, what would you tokenize, and what would your personal token actually represent?
Well, that's two nice questions. So first of all, I will answer the question of what part I would tokenize. I have actually two very nice parts of my life which I would tokenize differently from each other, because one would be a learn to earn token. It would be my youth, like my first years of my youth. I grew up with a father who was trading livestock animals, so I would go with him always to the fairs, and I build a huge network there, right? Because it's all people trading together with each other. They all know each other, right? So every morning I would go with him, and I was like 7, maybe 8 years old, and I would give a hand to all the traders. And there I learned how valuable our network is, because all these traders, they always would give me a coin, right? So they always would give me some money. So I knew always from the start, like, hey, dad, I want to go, and I would want to give everyone a hand to give me something, right? So I really learned there that if you build a network, at some point it will start rewarding you, right? So that's something I learned very early. So I always kept it in mind, like your network is your net worth, and it will really make yourself yeah, like in a position that you're valuable to others also. And the second part is actually when I started investing in cryptocurrencies. That was around 2019, I think. I went in heavy. I worked a lot. I worked in as a manager in a cleaning company, and I think, put 50 or 60% of my salary in cryptocurrencies. And I did this for 12 months in a bear market. So the market kept on going down, but I really believed in the projects I was invested in. I was invested in a few high caps, like VeChain early, and a few of those projects. And I just kept like the conviction. I saw what they were building. I really looked into them, and I was like, this is undervalued, and I started investing in them. Like for me back in the time, heavy. It was a few $100s a month, but for me back then it was a lot. So I invested in it, and even every month I saw it going down. I was happy that it went down because I could invest more. I was like literally like, I want to have as much as I can, like the tokens, right? I didn't look at the price like, hey, it's going down. No, I had conviction that it would go up, so I was even happy to see it going down so I could buy more, right? So that's a totally different mindset than I ever had. So there I learned a lot, and that profited me also very good amount. So that's where I learned to build conviction and place your bets in the right ones. So not like be speculative. No, just choose a few projects that are close to your heart and invest in them, yeah, like on a regular basis. And sometimes it's even better to see them going down, because you can then just build more exposure. So that's, I think, the most important part for me. And what was your other question? Sorry.
It was more or less, if there are the new builders coming in the market, because you have personal experience in TradFi, DeFi. So, what's the one lesson you'd like to share with them?
yeah, the one lesson I learned myself, and in the last months of what we are building, and we raised, of course, you launched, is that you have to be very transparent to everyone, right? If you are very transparent and you share your vision and what you're building, people will love to be part of this journey, right? We have a lot of fans in our network, like we who invested in us, who are not selling their tokens, or are really invested in the journey and see this as the future, right? So I would like say, like, build build it with a small group. Don't give too much exposure to people who don't love your story, because at the end, a lot of people will only get in for the money, but you should take people who are really there in for the mission with you together, right? Then you can build something really special together, because it's more than only a token, right? It's a movement. There are a lot of people who make the mistakes that they buy something, like they sell their tokens to people like VCs or whatever, who have no bonding with that project. And I think it's very important to really keep a track on your equity, protect your equity, and build something for the long term. So you can really be proud of what you're building, and have people around you who are proud of what you build.
That's genuinely a very nice advice. I take some for myself as well. So thank you, Martin. Thank you for your time, and thank you for joining us on this episode of Conversation with OCT. So I think these are the conversations that actually remind us, how important it is to build with the right people. How tokenization about assets, or maybe how important it is, how better it is. It is not just about assets, it's about access, innovation, and the people that drive both of them. So thank you everyone for listening to us, and stay curious, guys. Keep watching the Web3 world, and if there's something, Martin, you would like to directly say to our community, we'd be love to.
I just want to thank everyone who took the time to watch this, and thank you guys for the invite. Of course, I really appreciate the support you always give us. You are with us, I think, since launch. We're already talking, so that's really great. We have talked a lot in the past. You guys share great outlook, so it's always amazing to have a chat with you guys. And if everyone wants to stay updated, please, yeah, just check our channels. If you have a question, just send me a message. We're always open to discuss, to see potential synergies, to maybe even invest in you guys, or invest in others, or explore investments in us. So always open to connect.
Thank you, Martin. And it was lovely having a chat with you. And everyone, I'll just drop a link in the description for the Welf's website, their Telegram community. Go check them out. And I'll see you in the next one. Till then, bye bye.